In this episode of the Seatrade Maritime Podcast, we'll be talking to Adam Kent from Maritime Strategies International about the outlook for shipbuilding in 2026. Adam, could you give us an overview of that market, the shipbuilding market in 2025?
Yes, of course, market. Shipbuilding remains another interesting part of the market, and last year, 2025, was actually what I would say was the fifth year of a sustained ordering boom. We saw over 90 million gross tons of vessels ordered last year. And as we've heard, once more, this was sort of dominated by the container ship sector, which accounted for nearly half of that 90 million GT total. Contracts last year actually pushed up the order book to 300 million gross tons. That's now the third largest order book ever, only surpassed by 2007 and 2008 at sort of the end of those glorious super boom years. What that does mean is that we're sort of set to see deliveries ramp up this year to around 80 million GT, and will almost top out at 100 million GT next year in 2027. I guess the other interesting and continued factor in the shipbuilding market is the expanding shipyard capacity, both expansions of existing facilities, but also a number of new sort of greenfield yards that have come out of the woodwork over the course of the last 12 months, trying to sort of take advantage of the current ordering glut and the sort of profitability in shipbuilding, primarily focused in China. And I guess the sort of the yard of note in China that sort of has come out of sort of mothball condition is Hengli. 2023 delivered 0 vessels, and by next year we'll be delivering something in the order of 7 million GT. So a huge ramp up in production at Hengli, which of course was the old STX Stallion yard that went bankrupt last decade. And what we've also started to see a lot more of is your sort of traditional yards now exploring new ventures elsewhere in lower cost countries, trying to help keep prices down for sort of mainstream merchant vessels, whether that be new yards in Philippines or Vietnam, while at the same time focusing their sort of top tier yards, their domestic yards, on higher end sophisticated vessels or even naval vessels. Of course, this was a tactic that we saw the yards deploy during those sort of 2000, the first decade and into the second decade of this century, to some success for some, but not very successful for others, shall we say. So it's been yet again another interesting year of developments within shipbuilding, and shipyard capacity does remain very elastic.
Some very big numbers in there, and echoes of 2007, 2008, which perhaps if you do remember those times, didn't end very well, did it? Coming into 2026, what is sort of the expectations in terms of new building orders? Are we going to see a continuation of those kind of numbers you talked about in the last year?
Yeah, I mean, it's difficult to see contracting volumes continuing at these levels for yet another year in containers or across the board. So we do expect to see contracting to drop this year by around 40% year on year versus last year, to around 50 million GT, which in itself is still quite an impressive total. Containers will once more make up a large part of that contracting volume, although it is a lower total, that has to be said. And will make up around a third, we think, of all contracting over the course of 2026. And as Dan has alluded to also, that there will be this continued move in a relative term towards smaller vessels rather than the sort of the 20,000 TEU vessels and above. We do expect 2026 to be another fallow year for ordering for the gas carrier market, the chemical tanker market, and the car carrier market. But that was something that we also saw in 2025 with orders for those sort of really sort of ramping up in the sort of 2022 to 2024 years. As we've also heard, so oil tankers and dry bulk volumes will be steady but not at the levels that we have seen in the last couple of years. And we really do think that we do need some orders for tankers and bulkers, given the age profile of the fleet, but we really think the ramp up in these sectors will come towards the back end of this decade and not in the next couple of years. In 2027, just looking beyond the current year, we do see this as the sort of nadir in the current ordering cycle, and we expect to see around 40 million GT ordered next year. So ordering will still be there. The problem is, I think, from a new building price perspective, that we will have an increasing number of yards, an increasing number of yard capacity competing for fewer orders, which usually means one thing, is that the yards then have to reduce new building prices to try and attract more orders. And we wait to see which yards will potentially win the battle when there's a lot fewer orders being placed by the world's ship owners.
So potentially good news if you're an owner and you are looking to order, but not perhaps so good if you've just opened a new shipyard. One of the other factors, and I think it was mentioned earlier in the episode, is the delay to the IMO net zero framework. Is that going to both impact the willingness to order, and also will we see people revising their orders to perhaps reduce them being dual fueled or whatever?
Yeah, I mean, I do think that obviously it is introducing yet more uncertainty. The fact, as I said, I think earlier in the episode, that it's a delay by at least 1 year, and whether it will be 1 year, 2 years, or more, we've yet to see, and we will see. But we will potentially get more visibility on that as the year pans out. I do think it will have an impact on ordering volume, given this uncertainty, and it will also put doubt in owners' minds when and if they order vessels, whether they order dual fuel vessels, the dual fuel technologies that they employ, or whether they just go for a dual fuel ready alternative, which of course is something of a halfway house, which costs a lot less than going full dual fuel engine capabilities. I do think that we will also see a lot more onus on energy saving technologies, because of course that can sort of get you some of the way to sort of decarbonising, using less fuels, whilst at the same time being a lot more profitable for the vessels and the owners, and a lot more attractive for the charterers. So I do think that we will see perhaps a further step up in those energy saving technologies or changes in hull forms as we move forward over the course of 2026 as something of a mitigant to not knowing whether to go for fuel, all-out dual fuel engine and dual fuel technologies.
Okay, so definitely some degree of impact there. I think one of the things that the shipbuilding market, you look at it, China has become very, very dominant, but we are also seeing these developments, the Korean yards looking into the US, India, Japan looking to revitalize its industry. Can anyone really challenge China?
I think the short answer is no, but I think generally China is here, certainly for the next 20 years, I would say, to be the dominant shipbuilder globally. As long as there isn't sort of strong political incentives to persuade or force owners to ordering elsewhere. Of course, the US TR 301 sort of started leaning that way, and obviously that could ramp up, given the sorts of events that we have been seeing coming out of places like the US over the course of the last 12 months, given the current policies that seem to be coming thick and fast. I think just the fact that China just now has this sort of wealth of experience, the track record, the supply chains, the infrastructure, the designs backed by finance, alongside what is more expensive but still remains a cheaper labour force than other sort of historical powerhouses of shipbuilding like Japan and like Korea. And it still remains a central prop to sort of both centralised, regional and local governments in terms of employing vast numbers of people, developing the labour force and adding to the economy. So I really do think China is here to stay. That's not to say that we don't think that some of the market share that China currently has won't be eaten into by some of the other sort of Japanese or Koreans, but probably more like the Indian shipyards or Vietnamese shipyards, which are sort of now the governments are identifying shipbuilding as a strategic industry, whilst at the same time, some of the Koreans and the Japanese, as I sort of mentioned previously, are also looking to start up or re-energize some of the yards that they have outside of their sort of domestic jurisdictions. And only over the course of the last couple of weeks, we've just had the Japanese government come out with its shipbuilding industry revitalization roadmap, which the Japanese government is looking to double Japanese shipyard capacity by 2035. And I think the success of that will very much be whether the Japanese can attract skilled workers back into shipbuilding in an industry that has, over the course of the last 10 years in Japan, really sort of declined from being sort of a very sort of dominant number two, number three player to really sort of playing, I think it attracted around 10% of all orders last year. So I think there really has to be a heart and minds type campaign to go alongside money and technology in Japan if it really is to start to sort of try and achieve some of the goals that the government has now set out.
Thank you, Adam. Some interesting developments to keep track of going forward. Thank you for listening to the Seatrade Maritime Podcast, and we look forward to joining you on our next episode.